How's it going, everyone? It's Sam. Amazon is down 20% after hours, and I want to give you some of the reasons why. Now, with that in mind, I still have to dig deeper into it. I'm recording this pretty much right after they announced earnings, but I want to bring this to you just down so much. Now, if you want to check out the link underneath the video to moomoo and to M1 Finance, there you can try out some new trading platforms, and it helps out the channel. I really do appreciate that. Now, they're down under $90 after the market closes. We have not seen this since Rona, I believe. I think it was back in 2020 that we were under $100. So crazy to see Amazon down this far and basically just erasing years of gains. Now, I realize other companies have done that, but Amazon's held up pretty well up until this point. Now, let's look through this because at first it doesn't sound too bad. Net sales increased 15% to $127.1 billion in the third quarter compared to $110 billion in the third quarter of 2021. So 15% increase. Excluding the $5 billion unfavorable impact from year-over-year changes in foreign exchange rates throughout the quarter, it would be increased 19% compared with the third quarter. North America segment increases 20%, and then the international goes down, actually decreased 5%, and they account for about 1/4 of the overall sales. Now, AWS accounts for the other part of this. These three segments kind of all go into the net sales. That increased 27% year over year to $20.5 billion, or increased 28% excluding changes in foreign exchange rates. So right there, it doesn't sound horrible. Of course, international segments are decreasing, but they're actually increasing when you include the foreign exchange rates. However, operational income decreased to $2.5 billion in the third quarter compared to $4.9 billion a year ago. So they had their operating income fall down about 50%. North America segment lost $0.4 billion, international lost $2.5, and AWS was the only part that actually had positive OI at $5.4 billion compared to about $4.9 billion in a year ago. Net income decreased to $2.9 billion in the third quarter, or 28 cents per diluted share, which beat estimates actually by about 7 cents compared to $3.2 billion or 31 cents per share last year. So it's gone down about 10%. Operating cash flow decreased 27% to $39.7 billion. Free cash flow decreased to an outflow of $19.7 billion. So now they had a couple $1 billion worth of free cash flow just this quarter. Now, they still had a couple of quarters of negative cash flow before this, but their revenue is increasing. So overall, this could have been worse, but I think what you have to keep in mind is net sales did increase, but also inflation has increased a lot as well. If inflation's up 8%, right, then they really have grown at a net of more like 7%. And when you account for other parts of the world having inflation even higher, you have to take that into account. Also, AWS is decelerating. It was up over a 30% growth rate before this quarter, and consistently, I believe it was something like 35 to 40% just about a year ago. Now it's down to 27%. So while that's still good growth, that is the major driver of people buying Amazon for the most part, because a lot of people don't really like their retail business. Now, it's going to be interesting to see what they say in their report, or what they say on their conference call. How are they going to navigate through these times? But obviously, the market does not like this. Down 20%, and this is after they're down pretty significantly already. Let's go to the 1 year and see how much they're down from their peak. At their peak, they were $183. Now they're down over 40%. And when you count for after hours, they're down over 50% on the last 1 year from the peak. They also have very light guidance for Q4, 140 to 148 billion versus 155 billion expected after projecting lackluster holiday sales. Q4 operating income guide is 0 to 4 billion versus 4.7 billion expected. They missed on revenues. They beat a little bit on net income, but they missed on AWS revenue, and operating income was lower than expected. So do I think that they should be down this much? Probably not, but when you were expecting to grow much more significantly and the main profit driver is not growing as quickly either, people are definitely going to reevaluate your company. Now, this may be the kick in the pants that the Fed needs to maybe shift their narrative. Now, I don't think that they really care too much about asset prices, but when you see major tech companies falling 20% in a quarter, 20% in a day, just because their earnings are so disappointing, maybe the Fed takes it as a sign that these companies are really getting hurt. They're going to have to lay off workers, and then they can start kind of softening their stance, which we'll see next week. Again, check out the links to moomoo underneath the video, and I'll see you in the next one. Bye.